Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Trump backs down. The U.S. president drops the proposed Hormuz cargo fee after urging from Gulf allies. But Washington intensifies its military pressure with fresh strikes on Iran. Asian stocks rally as softer U.S. inflation trims Fed rate hike bets. Tech shares lead gains with South Korea's Kospi jumping as SK Hynix surges on AI optimism. And China's growth engine sputters. The economy slows more than expected to the weakest in more than 3 years. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. A lot of market news, a lot of geopolitical news as well. But before we get into that, let's take a quick look at where markets are this morning. U.S. futures in the green, pointing perhaps to another positive session in the S&P 500 later today. Now that follows a gain in the S&P 500. So now we're seeing S&P futures 0.2% higher. A little bit of a retrospect, but let me run you through some of the numbers that we saw coming out of the biggest banks in the United States yesterday. It does show that Wall Street traders have cracked the code, perhaps, when it comes to equity trading, despite the geopolitical news that we're seeing out of the Middle East, the AI rout. 5 of the biggest U.S. banks reported yesterday. That includes Goldman Sachs, JP Morgan, Citi. Some of the numbers there: JP Morgan, $6 billion from stocks alone, 85% higher year on year. Goldman, $7.4 billion. That's a new industry high, up more than 70% year on year. In Citi, 45% jump, and perhaps on a regular day that would be extremely good news. But in comparison to some of its peers, investors saw that as shallow, and that's why we saw the stock decline yesterday. Now, there are many factors pointing to this staggering performance, really, that we're seeing across the financial sector in the United States. The explosion of AI investment, the spending there that's been boosting wider economic activity. And let's not forget about the monster $75 billion SpaceX IPO that offered some $500 million or so to banks. But Jamie Dimon put it out the best, probably. Markets are booming right now. It's getting as close to as good as it gets. We just don't know how long this is going to last. And this is especially the case with the volatility that we're seeing in markets. And speaking of that, Asian equities are trading 2.3% higher, led by the Kospi in South Korea. We're seeing gains in SK Hynix, both the ADRs, but also the performance this morning in Seoul. It jumped as much as 11%. The ADRs had risen 27% yesterday. So attention once again turns to chip makers, as there is some repurchasing activity that we're seeing there. And then we're also keeping an eye on Brent crude pricing. A little bit of steadying activity this morning, 1.3% higher. $86 on the barrel. We will talk more about the Strait of Hormuz on the show later on. And then the other big news for us is the yield on the 10-year notes, 4.5 or 4.6 at this point almost. The Treasuries did steady after CPI data had sent the yields sharply lower yesterday. We keep an eye on two things, or we kept an eye on two things. Kevin Moore testifying in front of the Congress, not pointing to a hawkish tilt, but saying that the battle is not over despite the softer than expected CPI report that came out for June yesterday. But we're also seeing that the chances of a hike, as put out by traders this month, sank below 20%. So perhaps not a rate hike for July, but keeping an eye out on that hawkish tilt for the remainder of the year, maybe September or October. Those are the things we're watching out for in the market. Some individual names there as well that are important. But most importantly, from our region, is the strikes that we're seeing. U.S. President Donald Trump has backed away from his plan to impose a 20% charge on cargo shipments through the Strait of Hormuz after U.S. allies in the Gulf urged him to.
UAE, Qatar, Bahrain, and Kuwait, primarily, and then others. I spoke to all of them, and they would love to invest more money in the United States at record amounts, and that would be very acceptable. And this way, there's no fee.
Now, even as Trump dropped the plan, the U.S. announced it had resumed its blockade on Iranian shipping. American forces also launched a fresh wave of strikes on Iranian targets meant to degrade its abilities to hit commercial ships in the waterway. For more on this story, we're now joined, as usual, by Stuart Livingstone-Wallace, our executive editor for the Middle East, North Africa, and Russia. Stuart, less than 24 hours probably, we saw President Trump announcing the 20% tariff and then backing away very quickly after saying that Gulf allies, including Saudi Arabia, the United Arab Emirates, had urged him not to. Just how surprising is that?
I think it was maybe more surprising they announced it in the first place. It was a very bizarre policy statement on two fronts. Number one, the scale of it. I'm not quite sure who advised him that 20% would ever be acceptable to anyone. It effectively bankrupts the industry at that level. By our own calculations, a supertanker would have to pay $30 million. Secondarily, it allowed the Iranians in a completely bizarre world to come out and say we were offering a much better deal on the tolls because ours were around $2 million a supertanker. I think there has to be back to the original position that there needs to be an international agreement on what fees might look like, or indeed whether there should be any fees at all. And as you know, I think the regional position, at least from the Arab side of the Gulf, is that there shouldn't be. It should be free navigation as it has been for decades.
And then we're also seeing that the blockade on Iranian ports and shipments has returned. This is according to President Trump's Central Command as well. Is it fair to say we're back at square one when it comes to this conflict? Yeah,
more or less. I mean, I would say two caveats to that. Number one is that the shipping companies have got somewhat better at sneaking out through the Strait of Hormuz, and we have seen a trickle of tankers coming out. So there is a playbook now for getting past all of that, and I think that's true both for, again, the west side of the Gulf and the Iranian side of the Gulf. And then the second thing that must be said as the caveat is that in terms of the strikes themselves, they are very focused. In other words, what they're trying to do here is send signals to each other. So if you look at the US, they're largely only targeting coastal military installations. As far as we're aware, there's been very little attacks or deliberate attacks on infrastructure of any sort beyond the military. And then from the Iranian side, similarly, they're mostly going after US military assets. There have been some exceptions, of course, like in Kuwait. So it's a very different level to what we saw in the first 2 months of the war. I think when that changes is when we should take that as a signal that things are escalating on a very, very serious level.
Sir, President Trump made the claim that he will get massive investments from Gulf allies in the region. That was in exchange for revoking that levy or that fee, the 20% fee. How likely is that the Gulf leaders are going to make those further investments, should I say, in the United States?
No, and I think that's exactly the key word, the further bit. So we already know that they'd pledged to invest certainly hundreds of billions, possibly trillions, in the US, and I think they were serious about that. We have seen a lot of deal flow this year. It's been very surprising the level at which it's happening. And we know that the Wall Street banks are going out and hiring a ton of people to manage it because it's on an unprecedented scale. So it is definitely happening. Whether the further element is true is a different matter. Now, we did get one source at one regional government who said that is not going to be the case. Whether that reflects everyone, I don't know. But I think given the scale they were already investing at, it would be difficult to do much more.
Yeah, and we haven't heard officially from these governments whether they have agreed to do this or not. But Stuart, thank you, as always, for joining me on the table. Stuart Livingstone-Wallace, our executive editor for the Middle East, North Africa, and Russia. Now, turning back to the U.S., U.S. consumer prices declined in June for the first time in 6 years, with a key gauge of underlying inflation little changed. Fed officials are likely to welcome the data ahead of the central bank's upcoming meeting at the end of the month, though inflationary pressures remain. I'm now joined by Bloomberg's David Savage, who is with our MLive team. David, good to have you on this morning. Softer than expected inflation data that we saw coming out of the United States. Traders are now pairing their bets for a hike in July. Has the news changed anything else at all when it comes to the hike for the remainder of the year?
Yeah, I think that's exactly it. It certainly changed expectations in terms of pricing of that July hike. It basically took that July hike off the table for now. But the general trajectory, it remains relatively unchanged. We still are pricing a hike for 2026 and another hike potentially leaning in that direction in early 2027. And so the earliest hike for now would be September, October. So I think that leaves a lot of economic data in between. But I think what that does is if the July hike is off the table, it really puts the spotlight back on where we're seeing oil trend. And I think that'll have more influence on where bonds are trading than commentary from the Fed in the very near term.
And David, another topic slightly different from monetary policy. We are kicking off earnings season. I was just speaking about banks in the United States. We're also waiting to hear more about the AI route and the AI trade, essentially. And we know that ASML and TSMC are under the earnings spotlight. What can we expect out of those two companies, and how would it solidify this artificial intelligence game that we're seeing in markets?
Well, that's exactly it. These earnings are coming at a very critical point where we've seen this, very relentless semiconductor rally, equity momentum rally, really come under pressure in the last couple of weeks. Now, it's really seemed to have gotten, a breath of new life here today on the back of this CPI data. But these earnings are really a test. We've seen actually, preliminary earnings from Samsung earlier this month. Really failed to stem some of the selling. We saw really positive sales numbers from TSMC also do little to stem the selling. So markets are more upbeat today, but they're really going to be looking at I think particularly the guidance and the capex guidance to get a gauge of number one, are we starting to continue to see that trend where the companies continue to guide higher on top of beating earnings expectations. But also, how are the profits, evolving in the value chain? There's been, some fundamental concerns that, it's getting too concentrated in areas and it's unsustainable. So it will be interesting to see, how the capex guidance comes through and whether again they raise further.
All right, David, we're going to have to leave it there. David Savage, Bloomberg M-Live strategist. Now, coming up, the outlook from Emirates MBD. Next, Stadtmiller, chief economist and group head of research, joins us next. This is Bloomberg.
There might be some that look at this morning's data and say, oh, mission accomplished, everything is swell. That is not my view. The members of our committee have no tolerance for persistently elevated inflation. And we share a resolute commitment to ensure price stability. Productivity growth has been strong, predating gains from AI adoption. America's labor force appears stable. Job creation has in fact kept pace with the workforce. We want economic growth to be more broad-based. This committee had long committed to a 2% inflation target. That is our resolution. That's what I'm here to say and double down on.
That was Fed Chairman Kevin Warsh speaking to U.S. lawmakers yesterday. The surprise slowdown in U.S. inflation is reshaping market expectations for Federal Reserve policy. Bond yields fell on the back of the news, and the dollar weakened after traders pushed expectations for the next Fed rate hike back to September or October. To discuss more on this, let's bring in Nick Stadtmiller, chief economist and group head of research at Emirates NBD. Nick, good to have you on the show. Welcome to the show. You just heard Fed Chair Warsh speaking about the mission is not accomplished despite those cooler than anticipated headline numbers on the CPI that we saw come out for June yesterday. Now, traders have pared down their bets for a July rate hike. They were expecting that 50-50 up until yesterday. Do you think that's the right way to go about it?
I do, Abir, and we've held for several months now. Our call has been that the Fed will remain on hold through the remainder of the year. And Warsh kind of surprised markets when he first came in as the chair and talking much more hawkishly than expected at his last press conference, at his first meeting as chair. And in a certain way, Warsh talking hawkish is doing some of the job for him. By talking hawkish and raising expectations for future hikes, it reduces the the pressure on him actually to deliver on those hikes. So we think that inflation will moderate through the remainder of the year, especially in core prices, whatever happens to volatile food and energy prices, but that ultimately the Fed can hold policy where it is and let the existing amount of tightening do the job for it.
But while yesterday during his testimony to the Congress, he did not flat out say that he will either cut or hike or provide a lot of clarity on the path forward, but he did give a little bit more of a tilt towards possibly a hike towards the end of the year. Did you find that a little bit surprising, or do you think that he's just trying to appeal to the public?
Well, look, the Fed has a dual mandate, and that is price stability and maximum employment. And unemployment is already pretty close to where most Fed officials think the long-term average should be, or the sort of target rate. And so it's really inflation where they're missing. So it really behoves Chair Wash to talk about inflation and underscore that commitment to get price growth down. Ultimately, I think that he and other Fed officials have to concede that a hike is a possibility because inflation is still above target and price growth does look a little bit sticky. But again, simply by acknowledging that, I think it allows the Fed to keep control of the narrative and to keep inflation expectations well anchored. If Wash were talking overly dovishly, I think you would see inflation expectations, really start to grind higher. So it's really a matter of letting the rhetoric do the work for policy.
Okay, and just returning to the geopolitics, the region itself, we've been seeing escalations over the past couple of days or so from the Middle East, and I've been asking this question to quite a lot of people, just because it's timely, it's a fast-developing situation. Do you think the market has mispriced just how long this conflict could go on for, and has mispriced those flare-ups that could potentially and are happening?
Well, I think these sort of tail risks in geopolitics are one of the hardest things to price. And ultimately, what oil traders have to do is trade supply, especially at the front end of the curve. So short-term delivery, I'm not talking about the long-term futures, but in the front end, traders have to price supply and demand as they see it. So a couple of weeks back, essentially what was happening is refiners were already running at max capacity, the refiners that are online, and oil was coming out onto the market as Hormuz was opening up, and prices had to come down because there was extra supply and lower demand. So it's not really an expectation story. And then when you have that dynamic as prices were coming down, ultimately it doesn't really make sense to buy oil and hold it just in case something might flare up. So I think the answer to your question really is it's not something that traders can price accurately. They just have to price the information that they have in front of them at that moment.
Okay, and let's focus on the economies of the region a little bit now. And I want to point to one major, the biggest economy in the region, Saudi Arabia. It's seen a lot of benefits from higher oil prices. The exports are at an all-time high. It's doubled down on other routes. But our own calculations suggest that the fiscal break-even for Saudi Arabia is higher now, especially if you account PIF spending. So and the infrastructure spending as well. So when it comes to the outlook on Saudi Arabia, just generally, what does that look like now?
Well, you raise a very good point, Abir, because I think the narrative back in March and April was, higher oil prices are more than offsetting the production declines, and therefore the budget deficit should unambiguously improve. And there are a couple of dynamics going on. One is oil prices go higher, subsidies to Saudi citizens for energy go up. Also, obviously, defense spending has gone up in Saudi Arabia this year. And then third, as you point out, is the infrastructure. And so last year, there was a real recalibration underway, reevaluating some of the more ambitious projects in Saudi Arabia. And now what we've seen this year is not only sort of a doubling down on the projects that they think are most economically viable and that they want to prioritize, but also looking at things like supply chain resilience, adding redundancy to some of their pipelines, and all that spending starts to stack up. So we think that the budget deficit will tighten a little bit from where it was last year, but it's still going to be elevated because they have those ambitious spending plans.
Okay, so a little bit of a silver lining for Saudi Arabia this year. Nick, thank you for joining us this morning. Nick Stadtmiller, Chief Economist and Group Head of Research at Emirates NBD. Now, Warren Buffett has pledged to completely dispose of his roughly $140 billion stake in Berkshire Hathaway over the next 8 years. He's announced a new round of donations to charities tied to his family, but he paused donations to the Gates Foundation for the first time in nearly 2 decades. This comes after the release of documents reigniting scrutiny over Bill Gates' ties to the late sex offender Jeffrey Epstein. And IBM is in focus after it posted the biggest drop in nearly 6 decades following preliminary second quarter revenue that missed estimates. Sales came in at $17.2 billion versus expectations of $17.9 billion, while infrastructure revenue fell 7%. CEO Arvind Krishna said IBM was caught off guard as customers shifted spending towards servers, storage, and memory. And payment processing firms Stripe and Advent International have offered to buy PayPal in a deal valuing the company at more than $53 billion, according to a Reuters report. The 60.50 a share dollar represents 28% premium to PayPal's closing price on Tuesday and is backed by about $50 billion in committed financing from banks. The two suitors would jointly own PayPal with equal stakes and do not plan to break up the company, according to the report. Now, still ahead, as China's GDP growth drops to a 3-year low, will Beijing unleash stimulus? More analysis next. This is Bloomberg. Chinese AI startup DeepSeek is set to be laying the groundwork for an IPO, with a filing possible as soon as this year. Sources say the company is working with accounting firms on its financials and is targeting a market debut around late 2026 or early 2027. We are told that DeepSeek is also seeking fresh private funding ahead of the offering at a valuation of at least $71 billion. And Saudi Arabia has become the biggest buyer of drones from Taiwan, purchasing a record $47 million worth last month. The shipment made the kingdom Taiwan's largest export market for drones, and the purchases come as Taiwan seeks to grow its drone industry and position itself as an alternative supplier to China. And coming up, we will talk to Megan Sutcliffe, Middle East Principal Analyst at Sibylline, as President Trump threatens to hit Iran's power plants and bridges next week. That is coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Trump backs down. The U.S. president drops the proposed Hormuz cargo fee after urging from Gulf allies. But Washington intensifies its military pressure with fresh strikes on Iran. Asian stocks rally as softer U.S. inflation trims Fed rate hike bets. Tech shares lead gains with South Korea's Kospi jumping as SK Hynix surges on AI optimism. And China's growth engine sputters. The economy slows more than expected to the weakest in more than 3 years. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai, and we still have a lot to get through for the program. But a quick look at where equity benchmarks are sitting at half past the hour. U.S. futures are still tilting higher, 0.2 higher at this point. Asian equities 2.1% higher. But the big story out of the United States yesterday really was with those big banks reporting their earnings, their staggering earnings. We saw the likes of Goldman, JP Morgan, Citi reporting their earnings. And JP Morgan, for example, $6 billion gain from stocks alone, a personal best, an 85% gain. Goldman Sachs, $7.4 billion. That is an industry high, a new industry high. And just to add a little bit more context to that, Goldman's equities revenue this quarter was slightly more than its full year result in that division in 2019. That's just 7 years ago. So in comparison, Citi's 45% jump in the division was seen as shallow by investors, and that is why we saw a decline in the stock by the close. Multiple reasons leading to this gain. We're seeing the explosion of AI investment over the past couple of quarters. The spending there has boosted wider economic activity, and also we cannot forget about the SpaceX IPO that handed about $500 million or so in fees to a bunch of banks. M&A activity alive and well. Morgan Stanley recently put out a note saying that volumes in mergers and acquisitions are on track to make this year the biggest year for deals. But Jamie Dimon, JP Morgan's chief, put it out the best. We just don't know how long this performance is going to last. We're also keeping an eye out on individual names. IBM dropped 25%, the most in decades, with those preliminary results worse than expected. But Asian equities are climbing today, 2.1% higher, led by the Kospi in South Korea. I'm taking a look at it now, about 7% higher. SK Hynix now trading 9.3% higher after a staggering performance in the ADRs yesterday. And then the story with oil is the same story that we've been chasing over the past few days. 1% higher almost. The movement in the Strait of Hormuz, something to keep an eye on. And then the yield on the 10-year notes, not doing much today. They did rally yesterday after that softer than expected U.S. consumer price report for June came out. Fed Chair Warsh not really signaling a rate hike or a rate cut, but giving just a little bit more clarity on the situation. But perhaps the most important element in all of this is that after the CPI rate came out, the chances of a hike for this month sank below 20%. So traders clearly keeping an eye out on those economic data reports coming out of the United States. Now let's turn back to the geopolitical story from the Middle East. President Trump has told Fox News that the U.S. will hit Iran's power plants and bridges next week. This is unless Iran comes to the negotiating table. Trump said he will target Iran's energy infrastructure last. It comes as the U.S. ramped up economic sanctions on Iran.
I gave them a chance. I wanted to give them a chance at making a deal. You know, we had a deal 2 days ago. It was done. And then all of a sudden, they couldn't do it. They didn't like something about the deal. They couldn't do it. And they shot first. And that was a big mistake that they shot first, because we have been knocking the hell out of them.
Joining us now to discuss the latest in the region is Megan Sutcliffe, Middle East Principal Analyst at Sibylline. Megan, good to have you on this morning. Thank you for joining us. Let's just start with where things are in the region right now. The MOU that was signed over 3 weeks ago at this point has all but collapsed. First of all, is that a fair assessment? And then second of all, we're also nearing the August deadline for those negotiations that are seemingly not happening. So where does this whole thing leave us when it comes to the technical talks?
Good morning. You're certainly correct that what we are witnessing right now is the slow collapse of the Memorandum of Understanding between the United States and Iran, and that the longer that this process persists, the less likely it is that we're going to see a major diplomatic breakthrough before the MOU formally expires on the 20th of August. Right now, what we're also seeing is, of course, the United States and Iran engaging in increasingly escalatory exchanges of fire, with the attacks that we're seeing in the Middle East becoming intense day by day. These are also paired with threats by US President Donald Trump indicating that the US will soon begin striking energy infrastructure or bridges within Iran. And that is extremely concerning from a regional stability point of view. But at the same time, it is notable that we've already seen those claims and threats from the United States before. It doesn't guarantee that they're going to happen, and it's likely a negotiating tactic at this point to try and trigger a breakthrough.
Megan, I was taking a look at some of the notes that you had earlier, and you mentioned that it is unlikely for Israel, which is a third party in all of this that led the initial attacks with the U.S. on Iran, that it is unlikely for Israel to get involved for the time being. Do you think that the elections, the upcoming elections there, have a part to play in this? And what are the other reasons you don't think Israel, that was up until a few weeks ago a major player in all of this, not getting involved?
You're absolutely correct that Israel was an integral part of the initial war campaign that the United States launched on the 28th of February. And it has also been a part of the ceasefire process, given its adherence to the ceasefire when it first came into force in mid-April. At the moment, of course, the election that is going to be upcoming within Israel and that will have to happen before the 28th of October is going to be weighing on the national calculus. But generally speaking, when it comes to national security, at this point in time, Israel is highly aware of just how delicate and changeable the relationship is with the United States. That's something that's true for all regional parties. And so going forward into the next few months, it's unlikely that we're going to see Israel acting unilaterally when it comes to Iran. Though, of course, there are other factors that could push us closer to an Israeli intervention, such as the relaunch of major combat operations on the part of the United States, which could well draw in Israel as a cooperating party or as an ally.
And Megan, we're also seeing a parallel thing at play here between Yemen's Houthis and Saudi Arabia, a flare-up yet again. So perhaps this is an existential question at this point, but what would it take at this point to bring this much-needed stability to the region?
Well, I think that if I had the answer to that question, I'd be in a slightly different job than I currently am. However, when it comes to what is going to be needed for a breakthrough here, of course, many have noted that it is incredibly easy to start wars, but it is incredibly challenging to finish them. And every war that has finished in the past has either occurred through a victory or through some kind of mediated settlement and negotiation. It's clearly demonstrated in this situation that the United States has been unable to entirely best Iran and claim victory or topple the regime within Tehran. And the same can be said when it comes to Houthis in Yemen and various other Iranian proxies that are active throughout the region. So in absence of a clear victory, of an absolute imbalance of power that facilitates the routing of an adversary, the other option, of course, is going to be negotiations. And it's only in those situations that we're likely to see a breakthrough. That's not to say that that process would be simple. Of course, when it comes to Yemen, this is a conflict that has gone on for over 15 years. However, it is one of the ways that we'll be going forward. It's something we've seen Saudi Arabia pursuing over the past few years, and likely something that we're going to continue seeing Saudi pursue, as well as other parties in the region at this point in time.
And just finally, President Trump also met with Iraqi Prime Minister, the new Iraqi Prime Minister, Ali al-Zaidi, yesterday, with the U.S. pledging to leave Iraq. Quite a monumental development there. How significant is that development in the midst of everything that's happening in the Middle East?
It is significant in the context of both Iraqi politics and, of course, the regional developments that we've seen over the past few months. Currently, the US is engaged in a broader drawdown of its troops from Iraq, and this was something that began in September of 2025. And, of course, US troop deployments into Iraq are far lower than they were 10 years ago, for example. Last year, at the beginning of the drawdown, there were only 2,500 US service personnel stationed within Iraq. And what we saw being announced in the meeting yesterday was a clarification on timelines, that essentially the US will complete this drawdown by September. In the context of Iraqi politics, of course, that presents many concerns when we're looking at the global anti-ISIS coalition that is still operating within Iraq and within Syria, as well as the broader tensions between the United States and Iranian-backed proxies in the region. That's something that's going to continue to be an issue, but the drawdown will likely continue.
All right, Megan, we're going to have to leave it there. A pleasure to have you on this morning. Megan Sutcliffe, Middle East Principal Analyst at Sibylline. Now, turning back to another region, China's economy slowed more than expected last quarter to the weakest in more than 3 years. The country's National Bureau of Statistics cited external uncertainty and domestic supply-demand imbalance for the slowdown. The data now turns attention to what policymakers will do next to ensure their annual growth goal is met. Let's get more on the latest numbers out of China from our Bloomberg China economy and government editor, Alan Wong. Alan, good morning. Good to have you on. Just talk us through some of the weaknesses that we saw in the headline number and what exactly led to that slowdown.
Yeah, of course. The Statistics Bureau put it as an imbalance. That is kind of an understatement of the problem that China's economy faces. We're seeing very weak domestic demand, including investment and consumption. Investment actually fell year over year, which is not something that you would expect from an economy like China's, which has been growing nonstop over the last few decades. So that spells trouble for China, and part of that story is obviously the property market crisis. Their home prices kept falling, even though in the month of June, the fall eased a little bit, but the overall story and trajectory is still going down. That's not good news for China's consumers because they're seeing their wealth evaporate, and that will hurt their sentiment in terms of spending. And in terms of investment, that too has been falling, and that means that the private sector doesn't want to invest and start new factories, and that is a problem for China's economy because that makes up a big chunk of growth. So that is mostly the main source of domestic weakness, and then I think the next natural question is what can China do?
Yeah, and that's exactly my next question. What actions can we expect from Beijing to return to target growth?
Yeah, exactly. So the problem is that China has signaled that it doesn't see an urgent need to do a lot more than it has promised to. And based on the conversations we've had with Economist, there's a consensus that China will improve the implementation of previous policies and will for now hold off from any fresh stimulus measures. One area they could look into is fiscal spending. Chinese government spending in recent months have slowed down to many people's surprise, but that's one leverage that China has used previously to try to boost the economy. For example, it could pick up the pace of investing in infrastructure. Launching these large projects can often be a good source of growth for China, as we've seen in previous years.
All right, Bloomberg's Alan Wong keeping on top of those China numbers for us there. And coming up, 4,000 participants are taking part in Ethiopia's national dialogue to address its deep political divisions and internal conflicts. We'll bring you the latest on that story next. This is Bloomberg. Ethiopia is launching a month-long national dialogue to address its deep political divisions, internal conflicts, and strained regional relations. The initiative faces major hurdles as key opposition groups have already refused to participate. For more on this story, we're now joined by Bloomberg's Fasika Tadesse in Nairobi. Fasika, good morning. Thank you for joining us. This issue, why does Ethiopia need a national dialogue, really, and what are the issues that this dialogue is intended to address?
Thanks, Sabir. So, as you mentioned on the intro, Ethiopia is going through a systemic and deep division among Ethiopians between the political parties, civil societies, and among the nations. So that's one of the reasons the country needed the national dialogue. The second one is there is a tension or ethnic tension and conflicts all over the country. You can in the northern part of the country or in Amhara, in Oromia. So there are different conflicts across the country. That's also the other reason for the national dialogue. And also there is a disagreement over the constitution where how the country should be led. So there's a difference among Ethiopians and political parties on that as well. And also there is a trust issue between regional governments and with the federal government and among the people. So those are the reasons why the country is needed the national dialogue with the aim of addressing all these challenges.
And so, Fasika, those are the issues that have been identified as priorities. So what is expected, or what are the expected outcomes of this national dialogue?
So the first thing is reaching on or generating a national consensus among these differences. And also we expect the expected outcome is to have a change in the government structure, and also we're hearing the Prime Minister saying several times that the outcome will lead the government to change or to limit the government term, mainly the Prime Minister or the President's term. That means to only 2 terms. That means the first time we'll be seeing the government term is limited by the Constitution. Yeah.
All right, Bloomberg's Fasika Tadisi, thank you so much for covering that story and following it for us. Now, coming up, we'll talk Wall Street. Wall Street's big banks are shattering trading records, but costs are rising. We'll bring you more analysis next. This is Bloomberg.
Looking forward, we know that things rarely move in a straight line. While we continue to see a largely resilient economic backdrop in the U.S., risks can emerge quickly and drive periods of disruption and volatility across markets. A keen focus on risk management remains paramount as we support clients across a range of market conditions. But it's also clear that we are seeing broad-based momentum across the franchise and a very strong environment for client activity.
I can't tell you that it's impossible that we will exceed the 11%. We're just not going to box ourselves into that, given that we see opportunity to take actions on the offense, which are accretive to shareholders and support our path to our medium-term targets.
I just think we're in a very healthy, active, exuberant market with very high prices and very high volumes, and we benefit from that. We just don't know how long it will continue. Could it get a lot better than this? It can get better, but how much better, I don't know.
Those were the chiefs of some of the biggest U.S. banks on their record second quarter results from their stock trading divisions. A good day for a lot of those chiefs yesterday. However, the revenue surge is coming with a steep rise in bank expenses as they invest heavily in technology and top talent. For more on the story from yesterday and everything around it, we're now joined by Balazs Penz, our Deputy Managing Editor for APAC Equities. Balazs, I was talking about those staggering results throughout the show, really. The increases year on year are just phenomenal for the likes of Goldman, JP Morgan, and Citi, even despite the comparison with its peers. But there's no surprise on the trading desk revenue. What did we learn from those Wall Street earnings yesterday?
Well, I don't know if we just learned this. Maybe this was a reminder that the bank always wins. We saw record trading revenues for all these banks. We expected very strong numbers coming off of a record first quarter, but these even surpassed those expectations. And the signs are there that this increased volatility in stock trading, especially around the world, has really generated a lot of enthusiasm among investors. And while sometimes investors win, sometimes they lose, the banks are always benefiting from an increase in trading activity. So we are seeing incredible numbers. Goldman Sachs especially set a record for quarterly trading revenue. All the other banks have done really, really well as well, exceeding his expectations, as you said. So overall, just a marquee quarter for these banks.
And Balazs, but there are some caveats there because costs are rising. Are we expected to see more of this performance going forward? What about that cost element especially?
Well, interestingly, some of that cost increase is a function of that amazing trading performance. There is a huge competition among the banks for talent and for ways to kind of take advantage of that enthusiasm among investors and of the huge activity, especially when it comes to the deals front, whether it's M&A or IPO. So there's a lot of competition for the top talent, and banks are having to set aside more and more money to be able to attract or retain that talent. So that's one area where the costs are increasing and where we can probably expect them to increase further. There was one interesting note from one of the banks. They cautioned against the sort of the use of AI and token spending. It's not a huge deal as yet, but they're seeing an increase of AI use, and it looks like that's something that they want to keep under control just to make sure the costs there don't get out of control.
All right, Balazs Benz, our deputy managing editor for APAC Equities, with everything we saw happening in Wall Street yesterday. Now on to some football news. Spain are into their first FIFA World Cup final since winning the tournament in 2010 after a comfortable 2-0 victory over France. Mikel Oyarzabal opened the scoring with a first-half penalty before Pedro Porro sealed the win just before the hour mark. It was a disappointing performance from favourites France, whose star-attacking lineup managed just 3 shots on target. Spain will now meet either England or Argentina in Sunday's final, which a lot of us will be watching. But before we head towards the end of the show, a quick look at where equity benchmarks are. Lots in the green, S&P futures in the green, NASDAQ 100 also 0.8 higher, and Dow Jones edging higher by the second. We're not seeing the same performance in Euro Stoxx 50 futures, a little bit lower today, perhaps impacted by the tensions continuing in the Middle East. And speaking of that, oil prices are edging a little bit higher, although steadying today in comparison with what they were doing yesterday, $85 on the barrel for Brent. That is it for Horizons Middle East and Africa. Stick around with us for Daybreak Europe. This is Bloomberg.